Good morning, everybody. It is August the 10th. Wow, time does fly, doesn't it? Time to kick off another trading day, and hopefully we'll have some volatility to work with today. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, I hope y'all had a great evening. It rained again here. We got rain off and on for the next 4 days. The western southwest, the monsoon season for Arizona, New Mexico, is drifting eastward, and we'll take it. It's really unusual to have days 80 degrees plus or minus this time of the year, but pretty nice. Okay, today is the 30-year auction. That's probably the major dynamic that we deal with, and just a little review. The 3-year and 2-year are usually up, not guaranteed. The 5-year and 10-year are usually down, and the 7 and the 30-year are usually up at some point during the day. It can come as late as 12:30 Eastern. Then after the 30 years auction, the market can go anyway. The 3-year was a fabulous auction. Yesterday's 10-year was really a pretty poor auction, and my guess is the 30-year auction will be deemed a pretty good one. It's the way that it does work. We start off this morning with resistance at 12.5 and to 14, and we have a high right here of 14. I'm hoping to sell 15s to 19s, 23 to 27. I think we've got an up bias, more interest in the long side than the short, but can sell failure to get through 16 to 20. On the buy side, good support at 4 to 8, so that'll be buy 1, and then 29 to 01 will be buy 2. Today's news, jobless claims 240, no one will pay any attention to it. PPI can move the market. Everybody's worried about inflation not being high enough now. PPI is called up 1/10. It's the precursor. It leads CPI. Core is called up 2/10. They actually look at both of these. Probably more so the raw number because it's a precursor. Natural gas plus 38B. And we have Dudley speaking at 10 a.m. And Dudley might have as much impact on the market today as the news does. So right here you have it. And we'll play for a trading range with an up bias in the 10-year. And we'll see if we can get a trade on early this morning. Looking at the 30-year. Okay, we had resistance this morning, 23 to 25, and then 28 to 31. So we got into that little second band of resistance. We'll make 24, 28 number 1, sell 31s to 03s, sell 1, sell 7s to 11s, sell 2. On the buy side, we'll make 12 to 16 number 1, buying 5 to 9, and then 29 to 01 for buy 2. And mouse just took a big jump there. I never know what causes that. There's also zap goes. Okay, gold was up. The drumbeat of war got louder last night. Korea said they're going to launch 4 nukes at Guam. Now, I don't think anybody thinks we're going to go to war over this, but something needs to be done to at least shut this guy up. And really the country that has the most leverage on it is China. And if they aren't going to do anything to bring this guy in, then pressure on China is needed, and that can be done economically. China needs our markets more than we need their markets, and so that if China doesn't step up to the plate, things could get out of hand in a hurry. And what do we have in the United States? We have Trump. It's all Trump's fault about this North Korean problem. Trump's making this guy tell us that we're attacking. So Trump is being attacked from within and without, and that's not a united front. What we need is a consistent show of strength right here to pull this off, and I don't think we'll get it from our country. Okay, gold. Got this little bulge up at 89. So 89.91, that was the next stop structurally, was 91. Sell 1, 94.96, sell 2. Stops above 1300. Where we headed on the buy side, 80.82. Perhaps it might take an 84 to get in. We'll play for a little bit of a setback, and then 75, 77 for buy 2. But you don't show strength with all this dissension and all these attacks. You need to show both sides of the aisle united if we're going to get through this without, going to a hot war. Which, again, I don't believe will happen. I think last time we sent money in big chunks to North Korea was to the tune of about $5 billion. He knows that Iran got $150 billion, so he's out there fishing for more money, I think. Okay, looking at the euro. Got a seller now at 118. And perhaps a buyer below 117. Structurally, got this rally down from the low 117s. If we break that, then the next market is, so 116.50 would be the next stop if 117 comes out. Though we definitely have a P, the selling started in Asia. Q period, we've rejected prices below basically say 117.25. So first buy is 117.25, followed by 117 even. And on the sell side, 17.50, sell 1, 17.75, sell 2. Playing the market numbers heavily this morning. Poured out on OPEC, highest production to date so far in 2017, came last month, and nobody should be surprised. I mean, it's just the way things are done now. Saudi Arabia will point to the fact that they've shut in 600,000 barrels to maybe 900,000 barrels for maintenance in August, and everybody in OPEC will be scrambling to fill the void if they can. So we're at our $50. 50, 50 and a quarter, sell 1. 50, 50, 50, 75, sell 2. Everything is pointed up. Should at least get stops above 50. And on the buy side, 49.50, buy 1. 49 even, buy 2. So it's been a 48.50 market to a 50.50 market, and crude normally trades in $2 to $3 ranges, and so we're getting close to the top of the range. last but not least, the E-mini, everybody's favorite contract. You know, it's like the E-mini is burned into you. I had lengthy discussions with Pat, you know, why. And Pat is the E-mini from the tip of his toes to the top of his head. That's why the E-mini, because of the lack of the requisite volatility you need as a day trader to prosper, and he just can't help it. It's just it's the way it is. And I know a lot of people are like that, but you know, the objective is to make money trading, and throughout the year there'll be 4 or 5 huge opportunities that are easy to see and easy to play off of an explosive piece of news that changes everything in a market, where you can just jump on board. So, you know, if the E-mini is your bread and butter, learn to trade the bond in parallel. The bond still has enough volatility. They allow it to sell to let you make money. Take a look at crude or take a look at gold. No need to be frustrated in this game. Okay, we're at 65 right here. 65 to 70 is resistance. Would like to sell against 70 if we could, but you got a pretty clean break here at 66. So 65, 67, sell 1. 69, 71, sell 2. I'm going to put a question mark at 60. We got to take out that low to stay with the short side. I think there's one short left in the market, and if we don't break the 59.60 area, we're going to trade from the long side. Buy 1, 55 to 57, buy 2, 50 to 52. News, jobless claims, 240. No one pays attention to it anymore. PPI, both numbers plus a tenth, and actually the PPI number, because it's a precursor, is more important than the core number, because it covers everything. And then nat gas plus 38B, and Dudley at 10 o'clock Eastern. And we'll see if the Fed is floating any new trial balloons. Focus will be PPI, core PPI, and the technical will be whether we can bust 24.59 or not. Okay, it's going to take a while to get stuff up and posted. Get busy on that. Be back with you as soon as possible.